Welcome to the Money Mentors Podcast.
Welcome to Money Mentors. I'm Gary Mattson, and as always, it's a wonderful time to share the news, the excitement, and even a little trepidation what's going on in the market.
A lot of trepidation for a lot of investors, Gary. We've been talking about it for weeks now here on Money Mentors, getting a lot of calls about it too. And we're going to try to put some of those fears to rest. We actually have an acronym, FEAR. You've been talking about it for years here on Money Mentors. What does it stand for in your world, Gary?
Well, fear is what I call false evidence appearing real. It's fear. And so we can take information wherever we get that, and then it adds to the trepidation we're feeling. And now we're fearful that we're going to lose everything. The world's going to collapse. Tomorrow we're not going to have anything and we're not going to retire.
And it doesn't have to be that way, though, right? I mean, again, if you just step back from some of those 24/7 news channels at times and take a look at your own personal situation, if you had a plan going into these last few months, if you've been doing what we've talked about for years here on this show and actually diversified your portfolio, you might actually be feeling okay about things right now. Actually, at Mattson Financial Services, we've been talking about it with Laurel, with Taylor, with Corey over these last several weeks here, that your clients are not calling panicked right now about what we've been hearing in the headlines because of your investment philosophy. It is very different how you approach market volatility there. I think different than what most people tend to experience, whether they're trying to do it on their own or with their advisors. Can you explain how that different approach works at times like this?
Well, I think fear magnifies itself the most when you don't have a plan in place to react to what's going on. So when markets go down, we want to take advantage of that for our clients, so we want to buy. And of course, when markets are up, we want to harvest the yield. We want to take and sell that and capture those gains. If you're just sitting there with stocks and bonds and nothing's doing any changes to your portfolio, of course, you're going to see that as a very bad because your money's going down because the market's going down. But if you, every time the market went down, had a position of assets, we're going to take advantage of that, no matter what the markets did. Every time it goes down, you look at it as an opportunity. In fact, everybody in our office knows, the advisors there feel the same way, that anytime the market's down 10% or greater, that's an opportunity. And there are greater opportunities depending on how deep the market goes. Just like we did with 2020 and COVID, when we had the market down 30, 40%, while our clients didn't see all of that down, but we bought into it. We bought into it assets that did not go down or actually went up. And then when the market came back in that 12 months, and that's historically what happened, we had greater returns than when the market just coming back to even. So when you have that opportunity of investing, it's a great way to take care of our clients, and that's why they stay with us. But more importantly, we all make money.
I thought Gary Morningstar did a really good job recently of explaining what typically does well in a recession or a downturn like this. You know, things like bonds, gold, large companies, and consumer defensive stocks. Because, you know, we go and stock up, we still have to buy the necessities, things like toilet paper, paper towels, you know, the necessities of life. But are those the kinds of things to consider in this current downturn? Because you hear a lot of talk about how this time's different.
It's always different every time it happens because we don't know how deep the market's going to change. This one's different because it's actually set up on purpose, not just from an outside source, but a president saying we're going to have some short-term pain for long-term gain. Whether you like him or dislike him, that's not the question. The question is, what are you doing in your portfolio today? Dividend investing is a great opportunity right here because, again, your stocks are making money still. They're buying additional shares. So when the market comes up, you have more shares and you're going to feel that gain in the portfolio. Defensive investing, like you said about Jennifer, those type of stocks that are going to be for those products that are on the shelves, Kimberly-Clark, Procter & Gamble, Johnson & Johnson. Of course, they're always going to do well. But there's other things out there besides those two, like buffered indexes. Buffered indexes is where your money's in the market. You're going to get the return of the market with a cap, but you're going to have downside protection that if the market goes down, you're not going to participate that till it hits a certain number. Let's say 40%.
Okay.
So if you went into a buffered index now, the market would have to go down 40% more over the next 36 months, 18 months, or 24 months, depending upon the issue date. But on that exact date that it matures, it have to be down over 40% before you'd lose any money. So these are areas that our clients get to enjoy, that if they're saying, hey, I'm feeling very comfortable about the market, I want to take the risk out of my portfolio, well, we can give you the upside with some caps on that, but also protect the downside. So buffered index, defensive investing, dividend investing, these are the great resources we use to keep our clients on track so they don't have to have that fear, false evidence appearing real, that I'm never going to get my money back. Now, the frustration comes, Jennifer, as you know, when people look at that and they say, hey, I've got stocks and bonds in my portfolio manager's not doing anything, and I'm just riding ups and downs, and I'm not getting ahead.
Yeah.
The advisor's getting ahead because of the fees, but they're not.
Yeah.
That's a very bad position to be in.
In fact, I was reading one headline this week, Gary, about how all these Wall Street firms, they're racking up the fees right now because so many people are, jumping in and out of things. Some of these big box firms are jumping in and out of things. They're charging their customers fees. And I do want to point out, too, at Matson Financial Services, you don't charge those trading fees. So your clients don't have to wonder if you're just jumping in and out because of fees. You actually say that on the front end, that, you took that part of the equation out of it because you don't want people wondering that at times like this. It's about that fiduciary trust, and you've built that into your model there, right?
Exactly. So what this is about when we're managing clients' assets, it's about putting them in a better position than they were the day before. Now, that could be harvesting. That could be buying when it's lower. So think about it. I'm taking our company time, our energy, resources, and I'm changing a portfolio, and I don't get paid to change that portfolio. What's my motivation for changing that portfolio? I want to put my client in a better position, and when that recovers or that puts into a gain, not only does the client win, but we win as well.
Real life lessons about your retirement. You're listening to the Money Mentors Podcast.
Well, Gary, it's interesting. I've reached that age now in my life where I actually have friends who are starting to have retirement parties. I didn't realize I was that old, but here I am. And at a recent one of these parties, my friend Dan, knowing that I talk about finances with you every weekend, actually leaned over to me at his party and kind of whispered, ooh, I hope I did the right thing, noting this recent market volatility himself. And I think he was half joking here, but I mean, this does have to make new retirees quite a bit nervous here, even if they have saved really well. I mean, he's a successful guy, but yeah, I think he is a little bit nervous about this.
And you have to be if you're in a situation where you're walking out the door and you're down 15, 20% from the money that you put in that you thought you were going to walk out the door with.
Yeah.
I get that. But if he set it up properly by listening to you in our show, then what he did is he put enough money away for about 18 months, left the rest of it invested. That 18 months of money he put away into an income bucket that assures against negative market movements, and then he can let the rest of his money invest over the next 18 months to get the gain back over time. He's probably walking out the door feeling very comfortable he's not going to have losses. Yeah. And that's exactly what we do for our clients. We want to have an income bucket set up. We set that up, and that monthly income comes out of that with very little negative movement from the market, no matter what it does. And then we can refill that bucket with gains wherever they may come in. Obviously, right now, we're seeing precious metals and gold doing very well. Most of our clients hold that. So while if I need to refill their bucket right now, I'm going to do it from the positive side of things, say sell some gold, refill their income bucket without negatives, and let the other side wait to come back up.
Want weekly lessons from your money mentors? Yes. Hit the subscribe button now and listen every weekend on Wood Radio.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Fee-based financial planning and investment services are offered by Matson Financial Services, LLC, an SEC-registered investment advisor. Insurance products and services offered through Lakeview Financial Group, LLC, Matson Financial Services, LLC, and Lakeview Financial Group are affiliated. To find out if Matson Financial Services is licensed in your state, please call 800-536-8907.